Welcome to the program. I'm Mark Imperial. This segment's being brought to you by booksgrowbusiness.com. It's the place where busy professionals get their books done to educate consumers, grow their practices, and to leave a legacy. I'm doing a series of spotlights on remarkable advisors from across the country. And joining me on this segment is Ujae Kang. He's the founder of UAK Diversified out of Minneapolis. Ujae, welcome to the program.
Thank you.
Tell us a little bit about your work, and specifically, who are the types of folks that you specialize in helping?
Yeah, we're financial advisor firms out of Minneapolis, Minnesota, and St. Paul, Minnesota. We have an office in Rochester, Minnesota as well. We are independent financial advisor with a fee-only practice. They're surprisingly, there are only about 2% of financial advisors in the U.S. who are fee-only and are a member of NAFA, National Association of Financial Advisors. What that means is that we recuse ourselves from any commission or third-party fees, which makes us very independent, and overall client tends to save a lot on fees by avoiding expensive products. So we're founded. We've been around for about close to 10 years. We officially registered about 3 years ago. And ever since, we've been growing pretty rapidly thanks to popularity to fee-only demand. And it's interesting that non-fee-only financial advisors are noticing this big trend, and they are using the term called the fee-based, which really means nothing. But I think they're throwing out there to confuse, because fee-based literally means it will charge you a fee, like a fee-only advisor plus commission plus third-party fee, and it really doesn't mean anything. So we're fee-only financial advisor firm, and our focus is to be able to provide a full service with those folks who are transitioning into retirement or just retired from their career.
That's a really interesting insight, and I appreciate that because people probably don't realize when they hear fee-based and fee-only, they're two different things. So I appreciate that. So these folks that you work with in that particular group you just mentioned, are there any common big challenges that you hear from them? What is the biggest challenge on their mind when they reach out to you?
They oftentimes they're not quite sure if they have saved enough to retire, and frankly, everyone is different. So, but main theme is that they find that managing investment portfolio and drawing from it to last 20 to 40 years, because when someone retires, their money has to last for them for 20 to 40 years. At that time, it's more or less fixed in terms of whether they could increase their retirement or not. So it's really our focus would be creating cash flow projections, investment return projections, as well as different strategies that client might have, such as perhaps they have children who have special needs. Perhaps they have unique estate arrangement with their parents or other family. So everyone's extremely different, but most of them have one common theme that they really need help with strategizing tax and investment portfolio management.
Around that idea of, do I have enough money? Have I saved enough to retire? Do they hold any like common myths or misconceptions around that? Anything that you hear out there that might be sabotaging their success?
So if I understand your question, um, are there a theme that I see that could hurt their retirement?
Yeah, like myths or misconceptions they have around how much they should have or what they should do with it. What are some big myths or misconceptions you may hear?
Right. Well, I think it's the general rule of thumb is out there that people could use for their own planning, such as withdraw about 3% or so to have a sustainable strategy. Let's say someone has $1 million retirement fund, then I'll withdraw 3% of it every year, and they should be fine. And they're us that depends. Their investment has to grow about 5-6% to beat inflation plus draw that much so that their principal could be preserved. Unfortunately, a lot of retiree puts their money into CDs, which returns very little, and it really is not going to work out for them if they're trying to preserve their principal for the next 30 years. Because a very healthy investment portfolio would double roughly every 10 years. And that kind of growth has to be there to be able to have comfortable cash flow strategy. And misconception, I would say three major misconceptions. They have to really invest it in CDs to have security. Well, maybe they won't experience that stock market volatility, but the bigger risk is that money might not last beyond a certain number of years. And so again, it's very diverse in terms of what could be misconceived. Another misconception is some people might have done themselves, may have managed their investment portfolio themselves, and they're quite proud of the fact that they benefited from bull market. They often show me that I have this Vanguard total market fund, and I have done really well. I don't need an advisor. But when you look at 20, 30 years of stock market history, the Vanguard total market fund is essentially large cap US equity fund. And over a long period of time, they do really hair above moderate allocation, diversified portfolio with all the dramas, they end up slightly better than moderate allocation. So last 10 years has been extremely unique. You might have heard the term called the unprecedented bull market, and that's exactly where we have just went through. And I think it creates a lot of complacency and false sense of security that it can really turn against them if market were to correct, because that's where the most bubble is too. So a diversified portfolio would include a healthy dosage of mid-cap stocks, small-cap stocks, international stocks, emerging market stocks. Also, bond would be diversified enough so that it can fight inflation much better than a typical total market aggregate bond fund.
I appreciate that. Ujae, what inspired you to get into this field and help people with their finances? How did you get started?
I accidentally stumbled into this industry about 13 years ago. I was a corporate actuary, with statistician, introvert, what people call nerdy people in the back of the office. I was one of them, and in 2008, I was kind of got into this industry as a result of financial market crisis, where it affected the construction industry hardest. And I happened to work for a construction insurance company. So I was laid off, and I was hired to a big broker dealer in town. And I experienced firsthand that, there's a tremendous amount of need and quality services. However, broker dealers' primary interest was to generate commission and production. And so I really liked the work, but I didn't like the environment that I was put in. So even though after the recession, I went back to work as an actuary, I always thought of this should be someday my work. And here we are. We were able to set up an independent practice and make the dream come true. The work is very rewarding, and it's really every day, one client at a time. But to the extent that I could scale this to larger organization, I would, so long as I could maintain principles and a culture that client is our top priority, and every client should feel that they're the most important people uh, and they're perhaps the only client we have. So I want all of our clients feel that way. As long as I can scale this, I would like our organization to grow, and we have been growing pretty rapid pace.
Ujae, for folks listening who would like to speak with you, how do they find you, connect with you, and learn more?
Right, our name is fairly unique. It's a UAK, diversified. It stands for United American Knowledge, but it also happened to be my first, middle, and last name initial. Um, but the meaning of UAK is United American Knowledge. I really want this financial, one of the most important part of our our well-being is, health and relationship and finance. And I think there's a lot of myth and abuse and inefficiency in this wealth management industry. So I labeled it United American Knowledge Diversified. In other words, uh, or UAK Diversified. It's very easy to be searched because that name is extremely unique.
Ujae, this has been terrific, and I really appreciate the name of your firm and just really appreciate your advocacy towards your clients' success and education and knowledge. So I appreciate you taking the time to share with my audience today, and I wish you continued success for you and for all of your clients.
Well, thank you so much. That's our goal, and um, our goal is to deliver high quality service to more or less middle class. Financial advisory industry has been such that, just like the legal industry, very wealthy can afford the best lawyers, and very wealthy people can afford very decent financial advisors and have reasonable fee arrangement with them. We want to bring that to the more mainstream, and we hope to make a big difference in the future.
That was Ujae Kang. He's the founder of UAK Diversified out of Minneapolis, Minnesota. And this segment's been brought to you by booksgrowbusiness.com. It's the place where busy professionals get their books done to educate consumers, grow their practices, and to leave a legacy. That's all for now. I'm Mark Imperial, and thanks for joining me.